We aren't really taught financial planning in schools or colleges. And then we are just thrust out into the world and we're expected to, do our taxes, pay off our debts, build a sustainable source of income, plan for our retirement. How do we do all of that? So if you guys were like me, when I started my first job, I ended up spending a lot more than what I probably should have. And then in an effort to compensate, over the next few years, I was being very miserly and not spending enough. It took me a lot of trials, a lot of efforts, and a lot of mistakes, but ultimately I have come up with this foolproof method to make you millions of dollars. Okay, I lied. But what I did come up was these set of broad rules that have really worked well for me so far. All these rules can be broken down into basically two. The first one is understanding your financial landscape, and the second part is coming up with a financial plan. The common mistake that I see a lot of people do is that we come up with really good plans, but then we don't have a good understanding of what our current financial landscape is. Each and every one of us faces a unique set of challenges when it comes to managing finances. We are often confronted with student debts that can last for years, if not decades. There's always that threat of variable income or no income if you're in the early stages of your career. And also, we are also caught up so busy with our lives that we don't really have time to sit down and plan our finances. These challenges can feel quite overwhelming, but it's important that we prioritize our financial health. It's not just about comfortable living, it is about sustainable long term financial security and achieving peace of mind. What I suggest is that you pause this video, go grab a piece of paper and a pen, and start jotting these things down. Do not do it on the Notes app on your phone, don't take screenshots of the video, but grab a piece of paper and a pen and jot these down. Step 1. Look at your financial reality. What sort of debts do you have? Do you have a car loan? Do you have a housing loan? Do you have a family loan that you're contributing to? Whatever these loans are, just write them down on that piece of paper in one column, and in the next column write down the amounts that you're required to pay, and in the third column put down what is the last date of payment. Sometimes I like to prioritize the smaller loans first because that gives you that psychological relief that instead of having 5 loans you only have 4. But when you have a loan that requires a significant amount of commitment, or a loan that is very vital, or something like a car loan or a housing loan, you have to focus on them first. If you're a professional who's just starting out like me, there's quite a good chance that your financial status looks like this. You're working all week, you have no passive sources of income, you do not have a huge amount of savings, and by the end of the month, you end up being broke and you end up living paycheck to paycheck. This is normal. A lot of people face the same thing, but just because it's normal does not mean that it cannot change. On the piece of paper, now write down what your sources of income are. Write down if there is a passive source of income that you'd like to develop this coming year. If you don't have any plans to develop a passive source of income, that is okay too. The third point is, what is my current lifestyle? What sort of a house do I live in? What sort of a car do I drive? How many times a week do I go out? Do I end up cooking most of my meals inside, or do I go out all the time? How often do I go out to party? How often do I need to do these things? So this is something my dad told me in my childhood, and I've incorporated it ever since. Whenever I wanted something, let's say I wanted item number 1, 2, and 3, at that given moment of time, my brain does a really good job of convincing me that I need it. If I don't get it, you are going to die. Get those items. That's what my brain tells me. But what I do is I add them to the shopping cart on, let's say, Amazon, and I just wait. I give it 2 weeks. And in those 2 weeks, let's say I have item 4, 5, and 6 that I want, I add them to the shopping cart as well. At the end of 2 weeks, after a period has passed, I actually look in the shopping cart and realize that, hold on, I've not thought about item 1, 2, or 3. And on the rare chances or the rare cases where I actually do want something, even after 2 weeks, I go ahead and buy it. Is this procrastination? Yes, it is. Procrastination is not as bad as it is made out to be. It's not good in all spheres of life, but sometimes, especially when it comes to purchases, the spur of the moment purchases, procrastination plays a very important role in managing your finances. Point number 3, what should I be spending on and what should I be saving on? Procrastination is really good. However, you do have to know when to draw a line. Let's say you want to get a new laptop. You work on your laptop for your job 8 hours a day. You make presentations, and working on your laptop is really important for you to get that pay raise or to get that promotion. In that case, don't procrastinate, just get the laptop. This also doesn't mean that every purchase you make has to be a need. It shouldn't be an absolute essential. Because more often than not, all of us, in our desire to cut down on our expenses, start cutting down on wants as well. We go to either extremes. And what really happens is when you restrict yourself so much and say, no, I'm not going to go out, I'm not going to eat, I'm not going to go out with my friends, I'm just going to save a lot of money, what ends up happening is we tend to get frustrated, and that leads to poor financial choices in the long term. Spending money to earn money doesn't necessarily hold true only in a business. When you spend money on yourself, when you take that vacation, when you buy that pair of shoes that you wanted, what happens is you're sort of rewarding yourself and you relax. And in turn, you are actually invigorated and refreshed, and you want to go back to work and achieve your financial goals. However, to prevent splurging, what I do is that whenever I plan out my finances, I set a fixed amount aside. So I say, okay, this week I'm going to spend $400 on entertainment, and I do not cross it. That money goes only for entertainment, and I look forward to spending that on my wants and not my needs. The final thing is, what is your knowledge on finance? Most of us aren't too bad, nor are we too good either. Sometimes we need to read that book, watch that YouTube video, attend a course to improve our financial skills. But it is important that you know that all these things, whether it is this video or a book or anything, they're all add-ons to the base level of your financial mastery. And it is only you, through experience and your situation, who can compile a very good financial plan.